So Bitcoin has blasted past 96,000 and counting. It went past that $95,000 resistance mark that it had been fighting against for the last 8 or 9 days. And now we're above that significantly to 96, about 200. And the next stop, where's it going to go? That's what we're going to get into today. If you're not a subscriber, now's the time to hit the subscribe button. We bring you new shows pretty much every single day, unless I got something crazy going on. But for the most part, that's every single day. And with that, let's get right into it with Bitcoin. Now, so Bitcoin has, we had this huge level of resistance we'd fought against for 8 or 9 days in a row. And it blasted through that overnight. And we are now blasting through a next channel. So we blasted through this overnight right here. And now we're going up towards the next level of resistance. And there's not a ton of pushback. I mean, there's a bid at 98, 99,000 of resistance. And then, there's a lot of room to run. And so why are we here is a question that a lot of people might be asking. But there is so much bullish news about Bitcoin right now. And not only that, we have one of the biggest pieces of crypto legislation ever, and the first piece of real crypto legislation being pushed up, moved up to be done prior to Memorial Day weekend. So it's on the floor for May 23rd. So that's a major, major piece of legislation that's hopefully going to be pushed through. It's a pretty strong one. And there's a lot of talk about the $100 billion purchase of 1 million Bitcoin by the United States government, all done without hitting the taxpayer money. Well, these are huge, huge developments in crypto. And if you look at the outflows, we had 8 or 9 days in a row of inflows to the Bitcoin ETF. So, retail investors, these are individuals that are buying the ETFs typically, or could be countries, could be governments, could be, for the most part, they could be companies and things like that. I don't know why they wouldn't just buy Bitcoin itself. Maybe because of the ease, the security, the control, whatnot. But anyway, that being said, yesterday we had our first outflows. Yesterday we had ADP numbers come in. We had not ADP. I apologize. We had ADP unemployment came in well under expected. We had the GDP come in negative. And, if you really look into the negative GDP, it has a lot to do with the trade imbalance and accounting and whatnot. That might get revised by the end of the year to actually a positive, but that's how affected numbers work. PCE index came in as expected, 0. PCE year over year came in slightly higher than expected, but nothing really that crazy. Pending home sales came in hotter than expected. So people are buying homes. I know the government doesn't want that because they want inflation to cool. And one of the biggest numbers in inflation is shelter, your place to live, how much your housing costs, rent, things like that. But today we have a pretty big day with initial jobless claims. Are people being unemployed or not being unemployed? And that really goes to the strength of the economy. And if the economy is not doing well, there's not going to be a lot of jobs out there. And I know everyone's looking at liquidity right now saying, when is the money printer going to pump money into the economy so people have that cash to buy crypto with, right? Or when are they going to lower the rates so their cost to borrow is less? So they're going to say, look, if I don't have if it doesn't cost me a lot to borrow, I'm going to use someone else's money and I'm going to take my money and invest it somewhere so I can make a better return than the cost of my money. So that's the risk on asset chase, right? So, but I do not see the Fed dropping rates in May. I just don't see it happening, and neither does the market. The target probability for the May 7th Fed meeting rate increase or decrease is about nothing. 92% chance, 93% chance it's going to stay the same. Now, the important thing to remember is what they're doing with quantitative tightening. We've talked about this numerous times. Quantitative tightening is when they sell their mortgage-backed securities and their T-bills. Well, they relieved the T-bill tightening from $25 billion of sales a month to $5 billion, but they didn't touch the mortgage-backed securities. And there's a lot of speculation that they're going to not stop the mortgage-backed security sale, and they're going to sell those assets and buy T-bills, which is like tightening over here and easing over here. It would be mind-numbing, but they want to slow the purchases of real estate because more people that buy real estate, the more the price goes up, and the more that that's going to affect inflation numbers, and they want inflation to look good, and that's their easiest means of attack because it's one of the biggest numbers in there. That being said, I hope that doesn't happen because the housing costs are already inflated and expensive, and the cost of money in the purchase of housing is very important, and housing is the number one determinant of wealth of people in the United States. So if they can't buy housing, it's too expensive, wealth is over time going to deteriorate. I hope they're buying Bitcoin. All right, that's not financial advice. I'm not your financial advisor. But that being said, let's move on. Last thing. This is going to be a short one today because I've got a lot going on. But this is the liquidation map. And, the only thing that worries me right now is a pullback, which is normal, it's natural, likely to occur. But you see that there's a lot of long leverage potentially liquidated under the $95,000 mark, $96,000 mark. A lot of long leverage. So, just like me, I went long. When we had that pullback yesterday, I put on, it was at about 93,000 and change. I put on a long through BTCC, a high leveraged long, 25x. At BTCC. Very small dollar amount. I didn't put a lot of money on this. I put $37. I'm already up, 60% on that trade. Just a very fun little, I'll call it a wager. It was an educated wager, but still a wager because at 25x, you're gambling, okay? So I did this through BTCC, not for the inexperienced, not for people afraid to lose their money, because you will lose money, you will lose trades. You can get liquidated very easily. But if you're looking for any links to BTCC with all of their incentives to sign up, they're down below. But if you're an unexperienced trader, please do not even touch that. Ethereum, I sold some Ethereum the other day, and I wanted to cover my sale with a small, long leverage play when the Ethereum price dropped down. I put this on, and it's in the green right now by a little bit. And then when it dipped below 18,000, I did buy back a little bit of ETH, not a lot, but that's going to be more of a swing trade. And with all the news coming about ETH, you can well thank me for selling my ETH, and then the next day a lot of news comes out. But I'm okay with that because I still put that into Bitcoin, and I'm still a believer in Bitcoin long term. Bitcoin isn't controlled. It's decentralized. There's only 21 million in there. Governments are buying people, institutions, cities, states, all these things. I'm still very, very bullish on things like Bitcoin. So that being said, that's pretty much all I got today. If you have any questions, comments, concerns, put them down below. I'd love to hear from you. With that, I will see you next time.